Many of you are asking me about my opinion on Microsoft stock. The stock is down 10% over the last 4 weeks. It's been really, really bad for the company. And I did post something on Microsoft whenever it reported earnings. I said Microsoft barely grew earnings 13%, yet it's trading at 35 times forward earnings. It's the worst deal amongst big tech, and it should be trading much, much lower. And I was really wrong. I think Apple was the worst deal amongst big tech. But I did believe that 35 times was absurd for Microsoft. It was extremely overvalued. Now it's much better valued, but I still believe it's a little bit expensive. So I'm going to give you my fair value on Microsoft and talk about the stock in general. So I really hope you enjoy it as always. But Microsoft is an amazing, amazing company. I've always wanted to own Microsoft, but I'm a big believer in not overpaying. So even though the quality of the company is amazing, amazing company, I believe it's not worth infinity, and there's a certain price where I have some margin of safety that I would be willing to buy Microsoft at. But Microsoft is very diversified in terms of their revenues. The largest one, of course, is Microsoft Azure, or their server or cloud business, you could say. And Microsoft Azure is growing 39% over the last quarter, absolutely insane, versus Google Cloud at 34%. And AWS, which I own, is only growing 20%. So Azure is a beast at 39%. Taking into consideration that it has a 20% market share, this is not a small business for them by any means. If it was a 2 or 3% market share business, I'm like, okay, if the company is growing 39, 40%, it makes sense. But the fact that Azure has a 20% market share and they're still growing almost 40% for the second quarter in a row, to me, it's mind-blowing. And I love the management team at Microsoft, and I think they're doing an amazing job. So it's really amazing for Microsoft and Microsoft Azure. The second business is 365, which isn't really growing rapidly by any means. You could look at the chart, but it's very, very sticky and it's recurring revenue. And once in the 365 ecosystem, it's really hard to switch away from it. So they have, you could say, a very sticky revenue stream from that. And it's their second largest business, mainly subscriptions. The third one is gaming, LinkedIn, Windows devices, search, and many others. And no one uses Bing really. But Bing, they've been trying to grow it, and it grows 15%. But the one that has really surprised me the most, and I'm still shocked every time I look at it, is LinkedIn. I thought no one really uses LinkedIn anymore, and it's some kind of an old website. But LinkedIn is growing at a 28% CAGR. It's bringing in $18 billion in revenues. I was not expecting LinkedIn to be such an amazing business model. I mean, they can spin it off and it would command a very large valuation on its own. And I was just not expecting that. And every time I look at this chart, I'm like, wow, this is LinkedIn. Like, I just didn't expect that. And to me, this is really, really cool from Microsoft. Now, the latest report was amazing. They put up 413 versus 367 of expected, massive beat. Same thing on revenues. They get a massive beat on revenues. Microsoft Azure is expected to grow another 37% next quarter, which to me is, again, mind-blowing. And of course, they have the OpenAI stake. And OpenAI is planning to go public via an IPO, I believe in late 2026 to early 2027. And Microsoft is likely going to hold about a 27% stake in a public company of OpenAI. And there was a lot of optimism on that. Now, the main reason why Microsoft is down, in my opinion, and it's not just to the valuation, but even it's really the valuation. I mean, if you look at the valuation, it was trading at 34, 35 times earnings. And if you look at 2023, 2024, this is when OpenAI was taking off, and this is when a lot of the optimism came around Microsoft. Prior to the 2021 peak, whenever we had 0% interest rate, Microsoft used to trade at 23 times, 24, 25 times, 26 times. Now, some of the multiple expansion was due to Microsoft Azure, but a lot of the growth at Microsoft Azure was also due to OpenAI. So if OpenAI is facing more competition right now, which it is facing more competition, especially from Gemini, from Google, and this is the latest traffic share as of October of 2025, you could look look at the red square, which is mainly Gemini by Google, and they've been taking market share from OpenAI, or you could say ChatGPT in general. And also Anthropic has been taking market share from ChatGPT on the commercial side and the business side. So ChatGPT is still an amazing company, but it's facing more and more competition, a lot more copycats. And when something is attractive, a lot of people try to copy it. So if ChatGPT is experiencing much more competition right now, and if a lot of the multiple expansion for Microsoft was due to ChatGPT or OpenAI, that's going to come under pressure. So this is why I was saying that Microsoft was some kind of a bubble at 32, 33, 34 times. And if Google continues to take market share, especially with the latest Gemini version, is very promising. And other companies are entering the space also. And this is really what's driving Microsoft Azure. So it's not just that OpenAI have the 20% stake, but this is also driving their compute business of Microsoft Azure. A lot of the growth has been driven by the OpenAI stake and partnership in general. So if OpenAI, I'm not saying if it's going to fail, but if it just slows down in general, Microsoft's going to have a multiple contraction. And I don't believe Microsoft deserves 34 times earnings. And I personally don't really feel comfortable paying about 29 times earnings, where it's trading right now with more and more competition around the business model of ChatGPT or OpenAI or whatever you really want to call it. I think 29 times is still a little bit expensive for Microsoft in general. And this is my valuation model on Microsoft. I use the current earnings per share expected for the fiscal year 2026 of 15.52. This is adjusted again. It's not GAAP numbers. Then I put in 15% for the next 5 years, which I personally believe is fair. The analysts are expecting 13%, 17, 19. I think an average of 15 or 16% will likely be fair. So I put in 15%. Current P is 29, kept it at 29, and I put in the tiny dividend of 0.7%. At least it's still higher than Meta's dividend at 0.34%. You know, it's almost double Meta's dividend. But in total, I got about 94% on the upside, or 14.4% category, you could say, annual return over the next 5 years if you're buying Microsoft today. Now, this is not bad at all, and I think Microsoft is looking much better than what it was trading at a few weeks ago. But I personally still don't feel comfortable paying about 29 times earnings for Microsoft and the OpenAI, you could say, premiums that it had. And if it was trading around, let's say 25, 26 times earnings, which is not a stretch, it went there in 2022, 2023. It was there just a few months ago. It went as low as 24 times. If it trades at 26 times, in my opinion, there's less of a likelihood of a potential multiple contraction if I'm buying it at 26 times. But if I'm buying it at 29 times and Google continues taking market share and things just continues going wrong for ChatGPT in general, I think there's a risk of a multiple contraction. So if I want to take a margin of safety with a company like Microsoft, and if I want to pay 26 times earnings for the company, I would have to buy Microsoft about $420 per share for me to get it double over the next 5 years, or a 15% CAGR. So I believe Microsoft over here is not bad. I'm not as bearish on the company as I was a few weeks ago, but I think it's still about 11% overvalued, you could say, if you're looking for some kind of a margin of safety in case we have a multiple contraction, in case the growth ends up a little bit slower. I think the growth will likely maintain itself at 15%, but the multiple of 29 times I think is a little bit too high for me. But if I'm paying 26 times, then I'm not really facing such a risk of a multiple contraction that I'm facing if I'm paying 29. So I think 420 would be an amazing opportunity on Microsoft. It's only 11% from here, could happen next week or the week after, or maybe next month. It just went down 10% this month, could go down 10% next month. I mean, you don't really know. But for me, if it gets to 420, then I'd be interested. If not, then I maybe buy a little bit more of Meta. And a lot of those stocks, they are much cheaper in my opinion than Microsoft. But that's my opinion on Microsoft. It was not financial advice. Hope you enjoyed it. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.